everyone, and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com. And in this video, we will recap last week's market action and discuss our trading plan for the week. But first, if you want our free reports, click the link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on InsiderFinancial.com with your email. If you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area coded number. Never begin the format with 0. It will not work. And in the welcome email, you will get a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging services are all free services from InsiderFinancial.com. We do not run any Discord rooms or Telegram chat rooms whatsoever. With that out of the way, let's dive in here, folks. Well, it was a pretty dismal week here at InsiderFinancial.com. We had 2 alerts and we went 0 for 2, so we struck out. Just the overall market weakness, couldn't get anything to rally. Our rule is, and we broke our own rule this week. There is no edge in trading when the overall market is this volatile to the downside. You literally can't hold a position overnight when the markets are gapping down, especially with all the negative inflation data and economic news coming out. The only edge a retail trader has over institutions is a retail trader doesn't have to be invested 100% of the time. Use this edge during periods like last week and this week if the market is volatile and decline. Just sit back and do nothing. Holding cash and doing nothing is one of the biggest edges a retail trader has in his or her playbook. Plus, they can use stop losses. They can enter and exit the market quickly. The overall market will come down at some point, likely later next week. And when the market is more predictable and less volatile, then it'll be time to trade again. And we will be sending out more reports, new alerts to make up for last week. So again, we have a few things on our radar screen, but we're waiting until the market turns. But with that being said, there are a couple of things that we're watching, and we'll talk about that towards the end of the video. But overall, in terms of the overall market, stocks fell sharply Friday to wrap up their worst week so far this year as the Fed's preferred inflation gauge unexpectedly accelerated in January and consumer spending surged. The core PC price index jumped 0.6% in January and 4.7% from a year ago, coming in above economist estimates. Meanwhile, consumer spending surged 1.8% last month. This is the biggest increase in nearly 2 years. Investors are worried that the figures will add pressure on Fed policymakers to keep ratcheting up interest rates. U.S. Treasury yields rose in response, with the 2-year note climbing 9 basis points to 4.78% and the benchmark 10-year yield adding 7 basis points to 3.95%. For the week, the Dow dropped 3% for its 4th straight losing week. The S&P 500 shed 2.7%, and the tech-heavy NASDAQ sank 3.3%. Currently, the markets are pricing in a peak Fed's funds rate of around 5.2%, which aligns with the Fed's projections. Market participants currently put a 73% probability of a 25 basis point rate hike to 4.75% to 5% in March, and a 70.3% probability of another 25 basis point hike in May. And the chances of a 4th rate hike in June to 5.25% to 5.5% are a little higher than 50%. After the PCE report, the next big data point will be the February non-farm payrolls report coming this Friday. After this is after January's blowout number, so this report will be very, very important. And then we get the February CPI number in mid-March, and both of this is before the Fed's March 21st to 22nd meeting. This week, we have a couple of things on our agenda. On Wednesday, we get the Tesla Investor Day. The market is consolidating right here around $200. We're either going to break through 220 or we're going to break through 180 and head lower. But we do have support at 160. So again, we'll be overall, right now, I mean, I still see a bid in the market. Last week was a down week, but it was not like panic selling. It was very orderly. On Friday, I went in and bought some stocks, thinking that we are going to bounce. Let's see how it plays out this week. But again, I still see the bulls as having the edge this year. On Thursday, AI, this is one everyone has been focused on. They have their earnings report coming out on Thursday, consolidating right here between 20 and, basically 20 to 30, big range here, but we're getting this big wedge put in right here. So gonna get a major breakout one way or another come Thursday. Look for LHDX. Watching this one on Monday. Stock put out news after hours. Where is it? Stock running in after hours after the FDA approved its COVID-19 flu test. What's interesting is 2 days just prior to that news, the company filed for bankruptcy, said they will pursue it for sale. The company said it grew rapidly over the past several years as the COVID-19 pandemic spread throughout the world, but was hurt by the protracted regulatory process for a combination COVID-19 and flu test kit. Now that they got approval, does that take the bankruptcy off the table? Stock is certainly indicating that is the case. Has just a $5.58 million market cap. Big sales, did 212 million last year. Certainly one we will be watching this week, LHDX. Next up is SRNEQ. Guys, I've been telling you guys about this one. Sorrento Therapeutics. They announced they filed for bankruptcy. This is NASDAQ runner. Friday was the first day with the Q symbol, closed up 46%. I said, guys, first green day on the OTC with a Q symbol, you want to buy it. These ex-NASDAQ runners, NASDAQ NYSE runners that get the Q symbol and hit the OTC. The first green day, it was green right away. The stock opened at 26.44, dipped down to 26.01, but that was basically the low of the day and just rallied from there. So congrats if you banked on SRNEQ on Friday. GDVM, all I could say is, guys, buy the dip. This was just a complete overreaction. Quite hilarious. The CEO, Melvin, he copied, I guess, getting from his legal counsel. You can tweet something like, GDVM, there is no dilution. All expenses related to the merger and management of the company have been paid for by me. We will continue our mission to build a great company and are currently taking steps to address the current market manipulation. He finally edited it, cleaned it up, put out the new tweet without that. You can tweet something like this. Again, I don't know. The market just overreacted. I mean, the guy's just trying to cross his T's, dot his I's. It was a simple mistake. Market certainly hammered it. But, for those that are looking for some cheapies, they took advantage of the market dislocation and was able to pick up some stock. Again, this is the real deal. They announced on February 14th they executed their merger with Vmos Technologies, a cloud and cybersecurity company. They're just waiting for FINRA to do the name change, ticker symbol change. Founded in 2002, Vmos is a team of experienced industry leaders and professionals led by its CEO, Mr. Melvin. I don't know how to pronounce his last name. He holds a bachelor degree, including the Cisco Certified Inter-Network Expert certification. So, I mean, they are a Cisco Premier Partner. That is big deal. Certainly, we are excited, looking for the numbers from Vmos. Security details, there will be no dilution. Current market cap just 32 million. We see this one as an undervalued situation. We've been talking about this one on the channel. It is we don't like a lot on the OTC right now, but GDVM is certainly one that we like. This has been a big winner last year for InsiderFinancial.com subscribers. I was talking about it last year as a reverse merger play. And look at the corrections that we've had on GDVM. This was the first major correction. This is the second one. Each time that you came in and bought the dips, you've been rewarded. So again, we still see GDVM as putting in new highs. Tmbr up 37% on Friday. This is another one like LHDX, just an $8 million market cap. Extremely cheap. They announced they had received orphan drug designation for TMB-001 in X-linked recessive ichthyosis. So they put that news out last week, which is pretty big news. But again, what we really like about this one is that just an $8 million market cap, just 2.92 million shares in the float, can really get this one going. Certainly start paying attention to TMBR. We think this one has more room to run this coming week. Lastly, guys, we got two short squeeze names that I really like. First up is Bed Bath & Beyond. I think this selling has gotten overdone. 47% of the float is short. We're down here at $1.53. I think once this market turns, you're going to get the Wall Street Bets crowd coming in and start pushing this one higher. I think we're going to test $5 again. Certainly, you know, it's got the short squeeze potential. It's got the Reddit army behind it. BBBY, I think the selling here is overdone. Start paying attention to this one. Lastly, guys, this is one of the most undervalued situations on the market right now, TRKA. I've been watching this one. Finally, I really like the price action on Friday, up 17%. This one here, you look here, this one has almost 20% of the float is short. Huge volume. It's all over StockTwits. This is the stock that FinTwit is talking about right now. 111 million shares traded on Friday. Just 34 million shares in the float. We've got a lot of naked shorting going on. A lot of games being played. But I think they're going up against the wrong players. This guy here, he's just been buying stock like crazy. His name is Peter Coates. He's a 10% owner. He's now up to 10.5 million shares of TRKA. This guy is the real deal. Peter Coates, he is right now the 17th richest guy in the UK with a fortune of over 8.6 billion pounds. He owns the Stoke City English Premier League Football Club. I mean, the guy is the real deal. I mean, this position in TRKA, this is literally couch cushion money for him. This is nothing. He could buy the company in, you know, with petty cash lying around. He is the real deal. You know, people really need to start paying attention to TRKA, realize who this guy is. For him to be in here doing this, he obviously sees value in the company. He's been accumulating stock at much higher levels. This was a Yahoo Finance article. Last year, he just bought 3.5% more shares. He's been adding to his stake. So it's certainly, there are definitely things going on in his family office that he's been having high-level conversations about TRKA. He's certainly one, you know, he doesn't throw bad money after good. He definitely is seeing certainly something here for him to keep accumulating stock. So I think that some things are going to be happening with TRKA. This one is right now the stock we like the most right now. It has all the makings of a major move. TRKA is certainly one should be on your radar screen. This one, keep it realistic. He talked about this on Twitter. Buyback deal finalized, record earnings and expected strong quarterly figures for Q4 2022. Due to the high growth in sales figures, management receives bonus payments over 50% in insider ownership. Troika is among the top 20 U.S. advertising companies. Right now, you know, the main thing that's holding it back is fear of dilution. And I don't think management is going to do an offering. They have engaged investment banking from Jefferies to optimize its capital structure and explore strategic alternatives. Why would they do an offering after retaining Jefferies? And they have a billionaire shareholder. So again, all they got to do is make a deal with him. If they need any capital, but I don't see that happening. I don't see. I think the fears of dilution are greatly exaggerated. So again, TRKA. If it's not already on your radar screen, it should be on your radar screen because, like I said, we think this one's going to keep rallying. Finally, guys, Insider Financial and myself are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation by seller hold securities. This video is our opinions meant for informational and educational purposes only and does not provide investment advice. Well, thanks for watching. Good luck, guys. Remember to also smash that like button, hit the notification bell to be notified when a new video is uploaded. We're going to keep waiting for this market to turn. We got a few more things on our radar screen for subscribers that we've not discussed in this video. And when we think the market turns, we will be sending out our full reports. So again, click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com with your email. Good luck this week, and let's rebound from last week. Thanks, guys. Bye-bye.